Good morning to all traders and welcome to this market insights video. We are going to have a look at a few of the FX majors again. Yesterday markets plunged for another time, I would say this week, for a second time. After this time though, the realization that the optimism around COVID news are not going to really remain firm was a little bit stronger this time, I would say. As investors have become more accustomed to the risks that, well, there is two main risks actually. One is that it will definitely take longer from what they initially thought. And second, there's not going to be as many for everybody, right? In the initial circulation, let's say. So probably looking at the middle of 2021, even if we have had the first in circulation out in early in January. Now, we also need to shift our focus on the UK because numbers there have reached the 35,000 nearly of COVID cases. That's on a daily basis, the highest actually ever in the UK and in Europe. It's not just that, actually, it's the fact that the UK is on a lockdown. So it's a bit of a story there to keep an eye on, especially for the UK that is going through hard times, I would say, if we take into consideration that the transition period to leave the EU expires in 7 weeks and there is no clarity around Brexit. And plus, the most recent resignation of the communications director. That was yesterday. Was it just that though? There was also other stories surfacing on the news that Dominic Cummings was also thinking to resign, as well as David Frost, which is Britain's chief EU negotiator. And that, of course, in my opinion, is simply because of the legal challenges that the UK will face in case this market bill is going to be passing through Parliament. Additionally, and that is potentially going to have a negative impact for business owners, investors, and also landlords in the UK, was Sunak announcing or reviewing, let's just say, that probably there's going to be an increase in capital tax gains. That increase is around 8%, if not mistaken, right? So if we take all of that in consideration into the pot, right, pound is falling, and this is what we're going to start with. Last week, if you remember, we talked about this being a triple zigzag. We're expecting prices actually to start falling from 132.50 or so, but we extended up to 133. A very nice false break over here, okay, and we turned lower. To me, this is a decline down to continue minor wave 3. As you can see, I see this as an impulse to the downside. We did indeed say that we were expecting prices to end around here because I was looking at this as wave 1. Obviously, sometimes it's when we are seeing the market structure changing, you know, and we see how markets develop, we are going back and relabeling our initial scenarios. For that said, no, I'm not looking at this as a leading diagonal over here, right, in 1, 2, 3, 4, and 5. Instead, I'm looking at this as a multi-structural move to the downside with 1, 2, 3, 4, and 5 here. Yes, 3, 4, 5, and then 4, 5. That is respecting still the impulsive structure because a wave 2 went to 133. We still have space to 133.66, but I think this is pretty good indication, especially with both RSI and MACD signals supporting this. Good indication that we're going to continue lower. So I would expect in 130.78, 129.82, and then of course the previous low 1 and 2 to take to start informing a multi-structural move to the downside in minor wave 3. Euro dollar, we talked about this last week, of course, as well. We were looking at this to be in the immediate wave 4, correct? Because we said we are in wave 3 over here. This is an expanded flat in W. We've got X wave here. And why I changed my view here is I made it a triple zigzag because I identified a very nice, very well respected as well, expanded flat here in wave Y, right? Okay, over here. The 38.2 respected, 61 extension respected. And then we've got 1, 2, 3, 4, 5, 6, 7, 8. So this is an ABC, yeah, for wave X. And now what I'm looking at well, this bounce, okay, this is an ABC right over here. You can call this an A, we can call this a B, and we're gonna see a C over here, right, for wave Z. It could be a simple zigzag, it could be a double zigzag. We can even see that taking a different formation for wave Z is also very likely that this is going to end up being some sort of ending diagonal. Okay, so I would be expecting any move to the upside to be somewhat repelled by around 118.67 or so, and then move lower. And that I say because on the RSI and the MACD, I see some signals that they are indeed supporting some more upside. Now the other scenario is, as we called yesterday, this is indeed wave 4, and this is like the first move to the upside. This is going to be a correction, and then we'll continue higher for wave 3. Last, guys, I want to have a quick look also on Kiwi, because we've had a very good upside move the other day after the RBNZ delivered, maintained their interest rates, and they say they're not going to actually go below zero. Here's what I'm looking now. We were talking about this being a wave 5, if I'm not mistaken. That was the last time we talked about it, and it's been a while. Since then, obviously, we've had this nice pattern over here, and this is a clear triangle, right? Clear triangle, which then we broke with 1, 2, 3, 4, and 5. We ended wave X, because do not forget, in the long term, I see this as a triple zigzag in primary degree. So I'm waiting for wave Z still to come through, which means, first of all, with the RSI and also the MACD supporting that, it means that this could be well forming an impulse over here, right? So I would be expecting first this trend line from the triangle to be probably causing some sort of bounce over here, 67 or so, and then continuing lower. But before this, we need to break the 68, okay, which is also a very nice strong psychological support here, and then continue lower. Okay, so thank you very much for watching. Enjoy your weekend, and we'll speak again on Monday.